Good morning. It's May 2nd, and I'm Dawn Litchfield Brown. This is Dennis Nelson over here. We were thinking about what we were going to talk about today, and there's just so many things. It's going to be hard to get them all in. We have the conference with Charlie Munger and Warren Buffett, so that's why Dennis is here, because he's going to represent that crowd.
Yeah, I can relate to that crowd.
And then we've got the Fed meeting today, and they're expecting to increase a half a point. What does that all mean to all of us? There's the market, what it's been doing over the last few weeks, especially Friday, which was not good, but at least it wasn't Friday the 13th. That's coming up soon, though.
Yeah.
And I have some fun stuff just about mom and pop investors and what happened with all of these people who took to trading online during the pandemic, and how that's really affected so many other things. I was kind of blown away at the numbers. But why don't we start with the Fed?
Let's start with the Fed. Yeah, they are going to talk today, and they are expected to raise interest rates half a point. There is some talk maybe 3/4 of a point, but I don't think so. I think with this, what the economy is showing and what the market is forecasting, they may pull that back a little bit.
To the half, keep it at a half, you think?
Keep it at a half. If I were the Fed guy, I'd be down to a quarter.
Really?
I'd want to throw some encouragement. The markets are really negative on the economy, and this transition from the COVID economy to the get out and travel
Have
economy.
a life economy? That one?
Yeah,
where you
that
actually
one.
do something?
Yes. Having a little trouble making that conversion.
Actually, I think we're at some sort of I don't know what the right word is, where the whole world changes. You know, like when we all of a sudden had the internet, or all of a sudden had the combustion engine. So we're at a tipping point, I think, where there's enough people now coming into the world of making decisions and how things change, that maybe Warren Buffett and Charlie Munger think maybe he's a little bit antiquated.
Maybe a little bit.
Because who would have thought the world is not flat? You know, who would have thought that we would not have a wire on our telephone, or gas in our gas tank, or electric light? I mean, you just start to think about all these things and how bizarre they sounded. So now when you talk about blockchain and the virtual office and virtual real estate and virtual art and
electric cars
and all these things that seem they're hard to touch, you know, so you can't touch them and see them. It's really hard to move forward. But I think we're getting a new era. That's what I was trying to come up with. I think we're going to have a new era of what works and what doesn't. Like for us, my first home was 8 3/4%. And that was in 1972. My second one was 21.5% in 1981. Now that's inflation. I think what we're talking about now, everybody's kind of panicked. I don't think it's the inflation that's really panicking people, as in most areas. But when you talk about housing and things like that, where nobody can afford to live anywhere to even have a job there, who's going to take care of everybody? So I think there's a lot of what ifs and confusions and different generations clashing, which I know has always happened, but I think we're there. We're at that tipping point again. That's one of the things I think
where big changes are going to happen.
Yeah.
And
don't you think that's driving the market down?
Well, there are big changes going to happen. That's for sure. But what's driving the market down, at least in the short run, here, is that these big growth companies that prospered because of the COVID shut down and everybody living and working from home, now are viewed to be too expensive, and probably are. Look what happened to Amazon. The earnings report on Amazon was brutal. Now, I've never been a big Amazon fan.
But your wife is.
But my wife is, and if she wanted toothpaste, she'd call up Amazon to deliver a tube of toothpaste, literally.
Okay.
And that is not sustainable. for Amazon, and I think a lot of that was going on. But Amazon's investment into really kind of low margin, high labor. You know, they own a grocery store now. They own apparently this huge delivery service that they're contracting out. It's got to be really expensive.
Well, especially now with gas prices going up. All these delivery services are going to have to raise their prices.
And the distribution system they're setting up has got to be unbelievably expensive. And yet you look at some stocks that are doing reasonably well. And I look at AbbVie, a drug company, pays almost a 4% dividend.
That's nice.
But it's dropped maybe 10%. Are they going out of business? People aren't going to buy their product just because it's cheaper. People are going to buy that product because they need it.
Right.
So there's a lot of different market
discretion versus non-discretion
dynamics,
in some ways.
Yes.
So we'll look at those companies, but I still think when you said they're not going out of business, that's the key in your portfolios. You really need to know what's in your portfolio. And do you think those companies, even though they go down, are still worth keeping? Second thing is, are you living off of that income from the portfolio? If you're waiting, and I said this last week, if you're living off of capital gains, you're going to be hurt. And you can't take it out when you don't make it, because now you're like eating your seed corn or selling off your acreage or whatever. You'll have less to go back up.
Yeah.
So it's crucial that you have enough income coming from your portfolio, which is, of course, what our strategy does. It doubles the income. And John would say triples the income, but it does do the trick. But what I'm trying to do is help our viewers to get a handle on this market, because everybody I talk to is like, oh my God, the market, sky is falling. And I'm, of course, the opposite, always the optimistic one, and
you are.
I tend to be, because I look at things differently, and I try to look at all of the factors, not just the one that just stabbed me in the heart with the market dropping, because that's the one you feel the most, right? You feel that one. So we've got interest rates going up. We've got inflation going up, right? We have earnings going down slightly in certain areas, not everywhere, right?
Mm-hmm.
And so the price earnings of the stocks are still a little on the high side. So that's kind of the balance we're looking for. So when they say price earnings, if the stock is earning $1 and it's trading at 12, it's 12 times its earnings, right? So that's what a lot of people look at. How much more is the stock valued at from what is actually earning? That's what the price earnings is. But this was interesting to me, and I hope we have time to do it. But this was talking about all these day traders. They call them mom and pop day traders. I'm not sure exactly why, but it says that they lost more than $1 billion during the bull market.
Wow.
$1 billion. The bill climbs to $5 billion when the cost of doing business with the market makers is focused in, because of these humongous spreads, meaning the bid, which is what somebody's willing to pay for it, and the ask, which is what somebody wants to sell it for. The spread is huge. And this whole non-commission, which has fueled all these people to go in and buy and sell because they think they're not paying a commission.
Yeah.
When in fact they're paying well over 2% if you're taking in the spreads and the market makers that they're going to.
Right.
So the big companies, let's use Robinhood, has to go to a market maker to get these things taken care of, and they get a piece of the spread. Something along that line that's pretty basic. But there were so many other things here that brought to my attention. It said that retailers lost $1.14 billion in trading options from November 2019 to June 2021, assuming they held them for at least 10 days. Okay, a 10-day holding period. The trading costs ate up an additional $4.13 billion. And the reason I'm bringing up options is because these are all the opposite side of what we do. Remember, we're the house and the buyers are the gamblers. And they talk a great deal about the fact that these gamblers what they were doing is buying options very close, to the out of the money, but very close to expiration date, hours, maybe days, but mostly hours, and really kind of skewing the market.
Yeah.
I'm sure that you guys have seen that
we
trading.
we have seen that, yes.
Yeah, they say that small-time traders were buying more than 23 million call options a week. 23 million. This is not institutions, just everyday people. Like, well, not like us, because we're not everyday people. But I'm just trying to think of, without going through too much more here. It said that retail traders tend to favor short-term buying options. In particular, if you buy a call option and you pay some money for it today, and it either works or it doesn't work, right? So there's a small chance that you're gonna get anything positive, but you know what you're gonna lose. If you spend $2 to buy an option and it doesn't work, you lose $2. But guess who gets the $2? We do.
We do.
We get it all the time, every time that buyer goes in there. So we love that.
And our clients get it.
So, final words so that people can have a little peace about what the market's doing right now. Do you feel like it's just over gyrating?
Yep, I do.
Okay.
But it can over gyrate for a while.
Yeah, and clearly in certain areas where the meme stocks and those kinds of things, which we were never in, and hopefully most of our clients weren't in unless there was a play account or something. But I still feel very good about owning the stocks we own and writing the calls on them so that we get that extra layer of income, extra layer of protection. I don't think anyone will ever call us and say we don't have enough income.
Oh, definitely won't, because
That's
we
not
get
gonna happen.
that double income you talk about.
All right.
Yep.
Okay, well, hopefully this puts your mind at ease and your heart stops thumping so hardly. We are the Naples Money Managers. Money matters. But most important of all, you matter. Take care.